Taking a look at gold here on the 4-hour chart, we mentioned yesterday, looking for a possible break of this 4-hour structure. Resistance still holding strong, but at the same time, bulls are holding their own at support. What I'm looking for possible sell setups on gold would be a trend reversal. And if we take a look at the edge finder here for just a second, let me make sure, go to edge finder. Gold is getting a -4 to -5 range. Yesterday it was at -5, today it's at -4. But you know what's going to make gold really change into a bear territory like decisively on the edge finder? I'll show you what it is. It would be if the daily chart starts to trend lower and we start to see gold go from -5 into like the -7, -8 territory on the edge finder's output scores because of trend, right? Trend right now is still holding on to a positive daily chart trend. If that daily chart trend cracks to the downside, gold's going to start looking like a really potentially good bearish setup for me. And again, I recognize that you're fighting something. Oh, accidentally leaked the secret. We'll come back to that in just a second. If we're looking at this thing and it starts to break support, then I very well may actually start to look for sell setups on gold. We also saw silver down here this morning, oil down this morning. Why would these things be down? Well, we just discussed China's stock market is down 10%. That is a big hit to commodities because the Chinese economy is a manufacturing economy. A manufacturing economy demands what? Materials, basic materials, oil, silver, copper, iron ore, human labor. Not even joking. Like that's actually true, right? Big growing demand creates demand for more people involved. So anyways, the Chinese stock market taking a hit hurts that story a little bit for some of the more basic commodities like oil, etc. That being said, oil is still on a rocket ship to the upside here recently, and if it pulls back, I am actually interested. I still think that you may get a nice continuation opportunity, especially if the US economy with all that good labor data. I like oil longs if we can get the setup. I do believe we also have on the edge finder, we've got some setups for oil. Let's go take a look. We're pretty close. So as long as that daily uptrend stays intact, oil looking decent, right? You've got a +4 score here. It's very close to a +5. If you get that technical pullback into a level of support, I very well may look for some oil longs. So there's a lot of stuff setting up here today, and we've got just about 400 people here, and I'm going to do something kind of exciting. Here, some of you guys are spoiling the secret. You guys are spoiling the secret, okay? Got something fun for you guys. We've got something in the works here at A1, and I'm going to play some music here because I'm going to show the secret. The secret's out. This is just a screenshot that I took this morning of something that we are working on here at A1. Is anybody here a stock trader, an options trader, an ETFs trader? If you are, and you've been patient waiting on A1 trading to get started on something that is a stock market equivalent to the edge finder, today is something so exciting for us here at A1. We've been working on this for a long, long time. We've got something in the works here, and it's not ready. It's still being functioned or worked on. But I'm going to go into a little sneak preview here, and I'm going to show you guys some cool stuff. So what you're looking at is just a screenshot. If you're an ETF trader, if you're an options trader, if you're a stock trader, I got something so exciting to show you. This is our new 13F scanner. Now, just like the commitment of traders data is a way to track institutional money, if you're a stock trader, the 13Fs is your equivalent. With the 13Fs, we can select, it's hard to see on this picture, but I've selected Warren Buffett's portfolio in the screener. You heard that correctly. I've selected and filtered for Warren Buffett's stock portfolio. His holdings are all on the screen right now. This is a software tool that is almost ready. It is coming to market soon. We've been working on this for a year, countless hours. You guys know the drill. We're a software company, and we try not to miss with this stuff. If you're a stocks and ETFs or options trader, this tool is coming soon. And if you would like to get access to it early on, we just dropped a link here in the chat. So this is not, again, it's not ready yet, but we're going to be keeping up to date with stock data. We've got financials. We've got studying what institutional money is buying and selling in the stock market world. So let me just give you a little bit of high level what this tool is going to do. We've got all the different holdings of Berkshire Hathaway on the right-hand side in a pie chart for you to take a look at. We also have quarter to quarter the change in shares long or short. So if they bought a bunch of Apple stock or sold a bunch of Apple stock, by the way, did you guys know that Warren Buffett actually sold a huge chunk of his Apple position? He also sold Bank of America. Actually, no, I'm sorry. He bought some Bank of America. You can see all of this in this new thing, and we're so thrilled to be bringing this to market. It's something we've worked on for years. Well, not years. We've worked on this tool for a year. We've been building software tools for years, and this is a super long-term project that Frank and I, him and I do a lot of the design work here at A1. We've been wanting to do this for a very long time, so we're thrilled to bring this. Continuing on, you can also see the top buys and top sells quarter over quarter by the selected fund. In this case, we're looking at Warren Buffett's Berkshire Hathaway, but you can, of course, select different funds and see what positions they bought and what they sold.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Oil's pulling back here. You've got NASDAQ also up 0.3% here this morning, just recovering a little bit of that lost ground yesterday. I had a big kind of sell-off here yesterday, bouncing back here a little bit this morning. We'll see if that can persist, if buyers can stay strong in this area. The NASDAQ is still sitting at a level of support. The question is, can it really actually get some legs to get off that support? Because you got to think, guys, we had good NFP data, right? Strong NFP. And that held us here, but we didn't quite break through. I was thinking that NFP might have the potential to do one of these guys, but we haven't seen that yet. So we're waiting for price action to confirm, are we strong enough here to actually start to break resistance? Or is this consolidation going to fizzle out and, go test lower prices? I do lean towards the bullish side when it comes to the NASDAQ. The edge finders also giving us some nice confirmation on that side on stocks in general. But by the way, Bitcoin's also a bullish setup here for us. I want to look at that. S&P 500, Dow Jones, Nikkei, the DAX. Why isn't the NASDAQ? NASDAQ's only a +3. Seasonality, not super positive in the month of October. But just so you know, guys, seasonality-wise, we are coming into an interesting portion of the year. It is only the 8th of October, so we're not quite there. But let me show you something, some valuable data here. Okay. We're going to select the S&P 500 here. And what I want to show you guys is the historical average return by month shows us going into a very strong historical portion of the year. What you're seeing here is the 10-year average performance by month of the S&P 500. So September, we got through September. That was a slightly expected negative month, except the stock market popped anyways. It's just been a real strong year for stocks. And then we go into October. October is expected to basically be flat. And then finally, November is expected to be a very positive month. And finally, December is expected to also be positive as well. That Santa Claus rally end of year effect. So in my opinion, this month is an opportunity to potentially find some good opportunities in the market and get ready for that fourth quarter rally if we get it. Now, again, there are some things that could sour the story here. Don't get me wrong. This historical average is just that. It is just an average. Things can change. The market can morph and contort and do all sorts of things. If there's some volatility in the Middle East, if there's some uncertainty with the election, if there's not a peaceful passive power or whatever happens on that front, that could be concerning. But more important than all that stuff that I just mentioned is company earnings. If corporate earnings come in strong, stock market, in my opinion, is a dip buy every time. If corporate earnings come in rough, then we probably have potential sustained downside. And that's why we're going to be watching that so close going into the next few months is corporate earnings are going to be very important if you're somebody who's watching the stock market like myself. I'd like to see stocks come in with strong earnings, leading from the top line, talking about companies like NVIDIA. We want to see strong earnings for NVIDIA. By the way, NVIDIA killing it still. We want to see Apple, come in strong. We want to see Amazon come in strong. You want to see these big names deliver the goods, if you will. And if they don't, you got to be careful out there because then you could be staring down, a potentially overvalued market. But again, just depends where we get with that. Let's take a quick look at gold here. Is gold due for a bigger pullback? Well, in my opinion, we've had a very good run this year. That does not qualify it to be, we've had a good run, now it's going to come down. That's not enough of a reason. It is something to consider because we have had a very strong, solid year for gold. And we have some forces that work against gold now. We have pretty solid economic data coming in, which is a headwind for gold. We had NFP, services PMI, ADP, JOLTS jobs, unemployment claims. All were pretty good last week. This week we get some CPI and PPI numbers, which will be important as well. But right now, the economic data does not really support, in my view, a massive uptick in gold. That being said, the geopolitical situation in the Middle East is a tailwind for gold. So you have some conflicting forces. If either of these things change and we get both going in the same direction, let's say economic data starts to sour again, gold could make a rush to 2,700. But if the situation in the Middle East calms down in any capacity, then you have a double negative. Right now, I think you're kind of neutral. But if any of those stories change, which is why we do this every day, this is why we're on YouTube every day talking about this stuff, then you might have the double whammy effect of both down or both up. And I'll keep you guys updated on that if I see anything. The other thing I'd be looking for, just on a simple perspective, is price action. 4-hour chart, we're ranging. Can we break one way or the other to get a more decisive read on where price action may want to go next? So we'll see. Silver's kind of the same story. You're ranging here. You've got resistance overhead. You've got support down below. But with the Chinese stock market slipping hard, that is not particularly bullish for industrial metals like silver, copper, iron ore, etc. So if you get this break to the downside, that could be a nice move lower, in my opinion, on silver. But we'll have to see. Silver is getting a bearish read on the edge finder, I do believe. Let me see. Yep, silver and gold are both getting bearish readings on the edge finder. So I'm on alert. I'm watching for setups there. I was looking at the euro myself over the weekend for a possible short setup. But let me go look at some. Let's look at some FX together. Let's go major currency pairs. Hold on, I'm going to refresh the edge finder. Okay, so the euro, from a technical perspective, looks like it might have lost its steam. So let me go. I don't know why the edge finder decided to go to sleep on us. It might be my internet or my computer. But anyways, just from a technical perspective first. So the edge finder has, I think we're pretty close to a bearish reading on the edge finder scoring. That being said, last week we had real solid jobs data for the US. That's going to swing favoritism to the US dollar in our scoring algorithm. We also had a bit of a double top formation here. So if we just draw in some resistance, boom, bam, resistance up here around the 112 level, euro came down, broke support here on this trend line and this technical support level. To me, it looks like it could continue to trend lower, especially with that dollar index. I mean, keep an eye on the dollar index. If we can break through, what is it, the 103 level, 102 level, like this 102.6 level, if we can break through that or retest support here, I do like the dollar on the long side, as long as some setups form on the edge finder. Okay, so we've got euro dollar as a bearish setup. If you get a bounce today, I'm probably going to short the euro. USD CAD's a +4. So the only reading on the major currency pairs that's interesting to me is actually a possible sell setup on the euro US dollar. So if I take a look at this, again, double top potential here. Well, I mean, this is a double top, right? Because you had a top, second top, and then we actually broke support here. So if you get something like a pullback, does this even give us a... If you're like patient on it, something like this could be interesting. We'll see if the euro gets a little bit more of a bounce today. If you get a push up into this area here, this level of resistance plus this 38.2% retracement, and you might even be able to get a tighter stop on that, like maybe just go below the 50%. Because you also have some resistance here though at the 61.8%. So you have options depending on your trading style. Like for me, I might just do this. So like if we were to get a pop in the euro up into this resistance, considering that the edge finder still has a bearish reading at that time for euro, I could potentially put my stop loss above the 61.8% retracement plus resistance point that I've marked here. My thought process would be, I think we're probably going to hold this area, but if we don't, my second line of defense would be that 61.8. And if we don't sell off after coming into this area, then my idea was just wrong. Does that make sense? I just want to map that out because I also just want to kind of mention too that, the importance of just understanding that a trade setup like this or an idea like this is just an attempt. Meaning, if I like the euro on the short side and I'm right, then great, we can make some money. I could trail some stops, see if we continue lower. And if I lose on this trade, then it's just a very small loss and I look for the next one. And I think that once you get to that point in your trading, there's some real comfort in getting to that place. Some of you probably feel that way now. Like you've gotten to that point where you're like, okay, if I just size down tremendously, then I don't feel so much pressure to be immediately right. I can't possibly take a loss because it will crush my, my soul. The point is, if you get, this setup, I like it, but I'm not going to like cry if it breaks up, right? That being said, I do think that there's potential for the euro to continue lower. And a bounce here after following a lower low could be our next lower high before a sell-off. So I still like the euro to the short side. Edge finder confirmation is nice. Would like to see it, get to a stronger bearish reading. Like if we get up to or down to like -7, -8, that would be great, but we'll see. So you got some interesting divergence happening this morning. NASDAQ's up, S&P's up, Dow Jones down, Russell's down, but then China's down. Do you know anything about the story there?
Well, basically, it was something to the effect of they're not delivering a second round of stimulus, or they're talking about not delivering that second round of stimulus, and the market is like, we wanted the fiscal bazooka, and so the market just kind of punished it on the rumor. I did read I posted this with Frank this morning. If we go to HSI, I think that's where the headline was that I read this morning. So go HSI. Actually, I'll go back to another chart. 1 second. SPX, go this workspace HSI, and it was something like this one: plunge on no stimulus, no additional stimulus. They break their winning streak, shed 9.41% of the Hang Seng, down a ton. Investors who were hoping for the announcement of further enhanced economic support policies at the National Development and Reform Commission's press conference on Tuesday were left disappointed, according to this report. So, Alibaba's down. So basically, they're just looking for, we said it, we did it, we're going to do more. And I think it's because the summary was there's like $140 billion to like $280 billion, and they just were kind of vague and unclear on if there's going to be another chunk coming in. Now, I did notice somebody had put a report in here. This guy, analyst Ding Shuang, says that he remains hopeful for further stimulus measures at the end of the month, despite the red light today. But, I look at it from the technical side. A pullback was needed, or else this was essentially a broken chart. But like
Yep.
I did talk about this. My biggest concern was that if we go rip to the upside and we rip to the downside, that's not what I want to see with price action.
Mhm.
So what I'm hoping for is today's sell-off is actually quickly stabilized right around this 38% zone. And if things stabilize, that's probably a good thing. But it could be taken both ways, Nick. We could have this be a bear flag and then more downside. Or this is just putting a pause in this rip, and then there's some stabilizing here, and then the headlines are like, same thing. There's going to be a little bit of a floor. There's going to be more stimulus. They'll roll out something else, or it drips into the headlines, and then
Yeah.
we're back up to the highs.
No,
So I'm not
with you
that
on
worried
that.
about
I think
it.
I think if
yeah.
you're looking at this China move, as you said, it was probably due for a pullback. That is
Sure.
like a pretty healthy thing. A rally like this up in the near 30% in such quick succession, that's normal to see a pullback. But as you mentioned, what Chris, for those of you who are just tuning in, we're talking about Chinese stocks. What Chris mentioned is that if you see this thing completely reverse, like if you do this big, caret symbol thing on your keyboard, go shift on the 6 key. If that's what happens, right, then what you're talking about is probably more of a bear looking chart. That being said, I actually agree with you. I think that this dip probably gets bought as long as the global outlook situation still looks okay. And for me, Chris, what that actually leans over towards is like, are we going to get an area that I like oil? Are we going to get some dips in oil prices, and maybe even like energy stocks? Like, could we get a good dip in energy stocks? I've been wanting to buy a little bit of energy stocks, maybe sell some cash secured puts on Exxon again. I made some good money doing that last month. So I'm the same way. I view this dip as a potential opportunity, whether it be Chinese stocks or the ricochet effects that has hit the commodities world. I think you might get some discounts out there. You got silver's down 2.7, you got oil down 4.3. These things needed to pull back, and a little bit of scare on the stimulus front is just one side of the story for China, right? You still have the US economy looking strong. You've still got the Middle East uncertainty that's out there. I feel like there's a decent case for dip buys on oil and maybe some of the other raw commodities as well. So that's where I'm at. Not financial advice as always. I could be dead wrong on that, but that's kind of where I'm looking.
Yeah, I also think there could be some heavy amounts of manipulation here with oil. This is a lot of volatility here in the last, let's say 2 weeks of trading. For us to go up around 18% oil, and just today's candle alone's down 4%. I don't know if I talked about this with you yesterday, but I was in a webinar that talked about the prices of oil. That basically, if we're greater than 85, then Trump may be the winner, and if we're below, let's say 65,
oh, interesting,
Harris could be the winner, and if we're in the middle, it's going to be a coin flip. I looked at like 538's polls yesterday. I think Harris had a slight lead, like by 2 points or something. But oil prices, I don't know. I'm just curious if there's like ridiculous positioning here, where if we're staying in this 75 zone, there's not going to be a clear winner necessarily. But anything that spikes up above 80, 85, it might lean towards that's enough of a pain point for the inflation story to come back up and rear its head that everyone just wants change.
So you're saying like this, Chris, I've mapped it out for us. So you're saying
Right.
T-Man wins up here, H-Lady wins down here, 50-50 in the middle.
That's exactly right. Yeah.
Okay.
Yep.
Okay. No, that's
so
that's
in
good
one
strategy.
chart, that might be what decides the election. So I think it'll be interesting to see how it all plays out. And I just think there might be some heavy manipulation in prices where what is Harris, what does the Democrat side want to stay in power? They're going to want to see oil prices go right back down to the lows. They're going to want to see the lowest possible inflation reading, which does come out Thursday with
Yep.
PPI on Friday. So one good thing going into this election would be a better than expected, better than forecast inflation data.
Yeah.
And that's going to be a critical spot. Now, I still think that it's maybe the low that we print, and we don't see those lows for a while. Just by watching that Trueflation measure, I mean, we're up off the lows by like 0.5%. And this stuff in oil is, I'm happy. Other than energy stocks, I don't want to be in like oil futures any longer. I got out of those with some profits, so I'm just gonna wait, man. I'm gonna wait and see if there's decent pullbacks and maybe take a couple of defined risk trades. But I'm not looking to do anything crazy and kind of call bottoms. There could be a lot of crazy stuff going on here in oil in the next couple of months.
No, and again, to your point, Chris, about you do have an election right around the corner, and let's this is a bipartisan thing, because everybody who is the standing president or close to the incumbent, if you're the president right now, you're going to do whatever you can to make people feel good ahead of the election. And I'm not saying that to slander the existing administration. I would say the exact same thing if Trump was in office, or if there was a Republican in office, or a Democrat was in office. It doesn't matter. Human beings are going to do what they can to capture the vote right before. And the way they're going to likely do that is, as you've just mentioned, maybe try and keep oil prices, pump that as much as possible.
Yep.
Signal more rate cuts. These are not things that I'm thinking are big conspiracies. This is just human nature that is very obvious, right? If you're in your Fed chair and you want to keep it, if you're the standing president, you want to keep it, or this is just human nature. You want to keep sitting where you're sitting. These are the things that we might see a higher likelihood of. We'll bend it right here to make this work. So again, I wouldn't be surprised if inflation continues to cool and things look real solid for the story, at least until the election. And they're going to do whatever they can to keep that story as tacked as possible. And again, I'm not saying that I think that as soon as that ends, that all hell breaks loose and that it's completely reversed. I'm not saying that. It might actually be a pretty soft landing outlook, but I do think that whatever they can do ahead of an election is what they will do, because that's what I would do. I'm not accusing anybody of anything.
Yeah, don't rock the boat.
Right.
We've had this discussion. I've been fairly impressed with the market's ability to not feel like the Fed has broken anything.
Mm-hmm.
Yes, we've had some scares. I mean, I would say that the late July, August sell-off was a bit of a scare, but that was blamed on Japan, even though it really was the reality of the U.S. market. The one thing that does concern me going into the election would be earnings season, because a lot of these stocks, Nick, at these all-time highs or close to these all-time highs, a lot of stocks are priced for perfection, man. And earnings season might be okay because corporate profits have been good, and I mean, we've had growth, and there's been like a bit of a broadening out in the markets, which has been healthy the last couple of months. But I do think that economic data-wise, same type of thing. We're priced for perfection. I don't think the U.S. can afford to have a higher inflation reading on Thursday, Friday this week. I don't think the earnings season can afford to come in lower than expected, because basically, even if we have the earnings per share and the revenue, even if they come in lower, but barely lower, this market might absolutely punish a stock that's not just blowing out expectations.
Mm-hmm.
I just feel like that's the level of complacency and expectations that the market has set for itself. It's like everything's been so good that we've hit these all-time highs, and now to justify staying at these all-time highs or going to new all-time highs, we're gonna have to have some really upbeat earnings coming out.
And that's the thing, Chris, is I think that you mentioned something there too. The Thursday and Friday risk, CPI and PPI, is the bigger potential move would be to the downside, I think. Yeah. However, the probabilities of it being a good print or a acceptable print are right now very high, right? The expectations like, okay, we're going to keep cooling. So that's why the potential big payout would be on the short side. If you were bearish going into that, you saw a big slide on hot inflation. I totally agree with you. I don't think that, this market is priced very much for perfection, priced for good news after good news. And if you get any upset to that story, which could come in the form of sticky inflation again, or bottoming out inflation, the risk to the downside is there for sure. I kind of think that you take the full picture. You say, look, we've got the Fed still in the direction of rate cuts. We've got corporate earnings overall trending up. But as you've mentioned, that story needs to hold tight for this thing to stay the way it is. Otherwise, you got trouble.
Yeah, I listened to an interesting podcast yesterday. They were discussing. Have you heard about the late cycle expansion, which is essentially what we're economists are saying. This is where we're at right now. Is we're in the stages of like this rotation into maybe the fourth turning is what like the doomsdayers are calling it. But we also have like cyclical expansions and contractions, and so if we're going into like this final cycle, where this is where everyone leaves growth and goes into value, gets into commodities, gets into like dividend stocks and utilities and things like that. This potential rate cut by the Fed and maybe another proposed 25 and 25 by the end of the year, it might create more of like a cycle reset. And so rather than actually having like a late cycle expansion, which is like the end of the move, if it's reset and we actually go into like a growth phase again, it would be weird to see that happen, but that's arguably like what the Fed could be trying to create. Is we'll just kind of reset the clock and go back to, let's say, Q4 of 2022, when the market started to rip and we created like another bull market. If the Fed is able to do that, like that's a very impressive accomplishment. But again, all these things are kind of priced to perfection. So I think until, obviously we'll digest more data this week with inflation, but if the market just doesn't fall apart on itself, it might be stable enough to just maintain the course, path of least resistance. It's a little rocky, a little shaky. Look, man, we're trading inside the same range since FOMC. If you go back to the Thursday, the day after FOMC, we have not moved really anywhere in about, let me see what that is. I don't know how many days. I guess I could check the days here, but let's go to the 18th, 19th of, what's the 19th now? How many trading days is that? It's a lot. From the FOMC, even FOMC low to high. Yeah, let's go to this one. So we're going FOMC post. That's 13 trading days of price doing virtually nothing. Nothing. So
yeah, it's been a
choppy.
really interesting, choppy market here, just back and forth in the S&P.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.